Hello and welcome to Building Your Premier Accounting Firm. This is a podcast that's actually designated to help you as bookkeepers, accountants, and tax preparers actually work on your business and build the premier accounting firm in your area. It's here that we're talking about things that you can do to onboard your clients with confidence, retain your clients, work with them efficiently and effectively, getting paid what you're worth, offering quality accounting services. It's here each and every week that we actually have guests on the show to share with us things that we need to be considering as we're running our business. And so I'm honored today to actually have a guest on that I've been looking forward to speaking with. It's Arun Mathur. He actually is the founder and lead instructor for UltimQuest Knowledge. He actually is one that's presented to thousands of CPAs and business professionals around the world on the principles of business ethics. Now, he's actually helping with improving governance and other related topics. He explains essentially how operating ethically results in a return on investment to individuals and to the business. He inspires the next generation of professional accountants to achieve fulfilling careers that create positive impact within the society. So, Arun, welcome to the show.
Thank you so much, Roger. It's an honor to be part of your show. I'm really looking forward to our conversation.
Yes, I'm as well, because I think this is something that we really need to give some attention to. And honestly, in the CPA firms, the EAs, we're all talking about ethics, but it's typically when we're taking tests, it's when we're actually getting our certifications. And then after that, it's possibly something that we just don't bring up often enough. And so I want to go back to a few things. One, I want to set the stage and give my listeners an understanding as to why this is something you're passionate about and how you got involved in having this as being something that you focus on. Let's give a little bit of a backstory and then we'll dive right in.
For sure. So I've been in practice. I've been out of practice. I've ran my own business. I've done commercial real estate, land development kind of work. And over the years, like probably over 4 decades, I've observed like a cause and effect, like when you see success, you see failure. So one of the things I've observed is that the people who are succeeding in the long term, like my clients and the people I work with, I'm observing that they have a very strong ethical foundation. They're not just cutting corners. They're not trying to get the next deal. They're working with a very ethical kind of compass. And this is very contrary to what the media tells you, right? Because the media is telling you all the wrongdoing, right? The media is telling you the frauds, the scandals, the failures. So I came to this observation that we have like a misunderstanding about ethics. We have perhaps the wrong perception that this is theory, this is not important. Because what I see is the clients who have succeeded are not only intelligent, very hardworking, but they're sticking to a very ethical type of way of conducting business.
Yes.
They're not looking for the loopholes. They're not working in the gray areas. So I'm taking this message out there within the CPA world, within the business world, that, and it's not only for corporations, even the other sectors like government sector and the not-for-profit sector. If we can create an ethical foundation, you'll get returns ongoing for a long time. So in terms of business valuation, in terms of your bottom line, this is very directly related to your success.
Yeah, one of the things that comes to mind as you're sharing all of that are a few things that resonate with me. One of which is a good deal is only a good deal if it's a good deal for both parties. The second happens to be one of, are you honest in all of your business dealings? These are two codes that I kind of hold very, very important to me. But the third thing that I think is very essential to understand is your brand, your reputation. That's something that is, I think, a extension of your ethics and your interactions with your clients and customers and so forth. But where I want to now set the foundation for our conversation is to realize that although CPAs, EAs, we have these ethical evaluations that we're doing as we get our designations, one of the things that's important to realize is that as an accounting profession, as bookkeepers, as tax preparers, this is something that, although we may not have been tested on, is a key element of our profession. We have access to such sensitive information, both personal and professional, that we have to have this ethics discussion. So let me begin by asking, what does ethics mean? Give me a definition of what ethics is, especially as it relates to the accounting profession.
For sure. So generally, when you look at the term ethics, it would be defined as moral principles that govern our behavior. So that's what the dictionary would tell you.
Yeah.
So you dig a little deeper. I would look at it like my interpretation is looking out for the greater good, not just for your good,
Okay.
being concerned about the other human being, not to have, let's say, not to take action that creates collateral damage for someone else, like whoever else might be in your ecosystem. Being concerned about the greater good, being honest and forthright in our dealings, like not to deceive people, not to lie to people, that type of thing. So this is one of the fundamentals of society, not only for the profession or for business, but for any society to flourish. It requires that people behave in an honorable manner, people do what they say, people speak the truth. Now, it appears sometimes that you can get away with lying, you can get away with deception, you can get away, let's say, by cheating, right? We see that, right? Those things happen. But that's a very short sighted attitude. So I see it as an essential, right? I see it as an essential in business. I see it as an essential in an accounting practice. Now, our role as CPAs and accountants is to protect the public interest, right? We are a critical part of the system of capitalism where our ethics and our standards and our rules are necessary because we are signing off, we are sending documents to third parties like lenders, investors, regulators who don't have access to a company's books and records, like we have access to those books and records. So our responsibility is beyond just our client, beyond just our employer. Our responsibility is to the public, to the others who don't have that. So I think our ethical behavior is critical. I think even outside of the professional practice, I think quite often we end up having this kind of discussion with our clients in terms of their behavior, right? Like how aggressive should you be in tax? How aggressive should you be in business? What are the ramifications of aggressive tax position? So even the client's ethics, we end up kind of getting into that discussion, right?
Yeah. Well, one of the things that I think is important to realize here is you started very broad and you pointed out that this is an essential part of capitalism as it relates to the economy, that there's a trust that exists that as an accounting profession, people are expecting that when we're involved in preparing tax returns or certifying financials and so forth, that the information is accurate and it's been done correctly. That's very important because then the bedrock of all of our dealings, whether it be the taxes or the accounting, is sound information. It's accurate information. And if we didn't have confidence in that, obviously so many things would start to unravel because we wouldn't trust anyone. And so I like how this has kind of gone at that high level to begin this conversation.
Yeah, and this is very critical because, when you look at legislation, so for example, back in 2002, we had the Enron failure because they had very aggressive accounting practices. They convinced their audit firm, they even convinced the regulator that their accounting practices were acceptable, but they were recognizing revenue that had not been earned. They were recognizing future revenue, right? Mm-hmm. So Enron's shares went up exponentially in a very short period of time. As a matter of fact, I was in Calgary and I met someone who worked with the gentleman who was head of finances in Enron. He told me about the person's character and so on. So what I'm getting at is that if you lose sight of that, you lose sight of the impact of our work and the need for accurate reporting, you get a failure where the company is actually out of business completely, right?
Yeah.
Not only did investors lose money, lenders lost money, employees lost their jobs, the organization is no longer there, right?
Well, I think what it is when we as accounting professionals hear of these stories, it's not just a black eye on the individual. It's not just them losing their CPA designation. It's the profession taking a hit. And so I think that's one of the things that's so critical. And obviously, when there's this problem, we have to defend our reputations as accounting professionals, as CPAs, as enrolled agents. We have to say that this isn't something that is acceptable. So I like how we're having this conversation because
So,
it's
so
so
it's
relevant.
interesting what you said, because, like one failure draws attention to the whole profession, right?
Yes.
You look at it and say, what were you doing, or why did you let that happen, right? So in one of my courses, I actually have visuals that if you look at a soccer game, or if you look at a baseball game, or if you look at any game, cricket, soccer, football, anything, if you remove the umpire or you remove the referee, would anybody watch that game? I don't think we would, right? If the game is not being played according to the rules, nobody's interested in that game, because if there's cheating and lying, and if there's dishonesty, that game is not anybody'd be interested in watching, right? We want to watch actual talent, actual performance. And that is actually the function that the accounting profession plays. As philosophical as that might sound, that's exactly who we are. We are enforcing the rules and standards. We are creating that same corporate environment as would happen in a game, right?
I absolutely love that analogy. I think that is spot on as it relates to what it is that we're doing. We're facilitating this role of referee in the game of capitalism and the economy. So I think that is very, very well said. So thank you for that analogy. Get your free copy of the book In the Black, 9 Principles to Make Your Business Profitable. This is a how-to guide for accounting professionals to work with their clients and actually implement proven processes and systems to ensure that their clients make profit a priority. It is in this book you'll actually learn how to map the business and, in fact, make marketing, accounting, and production a priority within your client's business. You also learn the wisdom pyramid, how to actually take the information you're providing to your clients and effectively use it so that they can make more informed business decisions. This book is designed to help you communicate more effectively with your clients and, in fact, have them see you as their profit and growth expert. Get your free copy now of the ebook today, In the Black, 9 Principles to Make Your Business Profitable. So here's an interesting topic, because I know oftentimes ethics, we can rationalize them, we can bend the rules, we see other individuals that will compromise in various situations. And I'm kind of curious, I just yesterday was having a conversation about this, and the word entitlement came up many a times in the conversation. And it was interesting to me how the word entitlement was the excuse for the exception. It was a way of rationalizing, but the rule didn't apply to me. And I was just kind of curious, because I think today we're seeing a lot of entitlement philosophies creeping into things, especially in the social sphere. And I'm just wondering, what would you say as it relates to ethics?
So it's very interesting what you're saying in terms of entitlement. It reminds me of this comment, and I hear this when I speak in conferences where you get into the Q&A, and one of the themes that arises is that everybody is dishonest, everybody is doing this, so it's okay to do it, right? So, for example, if you're exaggerating on your expense report to get more money back from the company, your rationalization or your thinking is that I'm entitled to that because everybody else is doing that. This is how it is. Our bosses are doing it, managers are doing it, my colleagues are doing it. So in your mind, you're kind of rationalizing dishonesty, you're rationalizing like if you get cut through all the stuff, this is theft, right? You're stealing from the company, whether you steal from the cash register or from your expense report. So entitlement is, I think, related to that, where people have this mindset that everybody in our industry, in our company, in our jurisdiction is behaving like this, and therefore this is okay. I can give you an extreme of that. I have a client where we have accounting policy notes on revenue recognition. It's a very fundamental thing, right? When do you recognize revenue? It happens to be retail, so it's very straightforward. You recognize revenue when you make a sale, right? So from an accounting policy and a gap kind of analysis, or what is right, you would think it's pretty straightforward, right? Like you recognize at the moment you sell. But then you see all the shenanigans, right? You see all the things the companies try to push that sale to say we made that sale, even though you didn't make it, right? But you're trying to say, I heard the opposite of that just last year, where someone had a new client, and as they were looking at the opening balances and they were looking at the opening trial balance, got into a discussion of a truck that was acquired in the last week of December. And the new accountant said to the owner, he said, so your books show that you bought this truck at the end of December, you amortized the truck, and this is how you filed and so on. And the owner said, well, we intended to buy the truck, but we didn't buy the truck. So they recorded acquisition, recorded amortization, but never did the deal. So they were negotiating, but they never did it, right? So he said, well, that has to be removed because your tax filing is incorrect. You're taking an expense, you're showing an asset, which you don't have any of that. And the client said, no, because this has already been filed. We don't want to rock the boat. Just continue amortizing that truck, which we don't have. So then he kind of parted ways, right? He said, no, that's not how it works, right?
Yeah.
I actually know people who have left the entire sector, like people in the construction sector, people in home building, the accounting people have left the sector because of these types of challenges and people kind of stretching the rules, right?
I appreciate that story because it does illustrate a real world application of someone challenging the system and bucking the system, doing something that is clearly contrary to proper rules and so forth and is an ethical violation. So
Yeah.
kudos to the accountant who walked. I appreciate that. Kudos to them for saying something and drawing attention to it. That's exactly what happened.
So Roger, I'll tell you another funny thing. When I did this course, I have a course on ethics in professional practice. So about 4 years ago, I was researching and I was talking to my friends and practitioners. So I was speaking with one of my partners and I said, I'm doing this course and I wanted his thoughts and all that. So one of the interesting comments he made, he said, when we run into these dishonest operators or aggressive operators, and we as external accountants say, no, we're not prepared to do that. He said, the funny thing is they will find someone who is prepared to do that. So isn't that interesting, right? Like, so you stick to your ethics, you stick to the standards. But he also shared with me that they will find someone, right? It's not like they'll be without an accountant. So
yes.
That is another interesting anomaly in this whole reality, right? That the aggressive people will find aggressive accountants.
Well, the thing that's interesting is even though you've got the mobs and the crime and so forth, they all have accountants. I mean, everybody wanting to account for their numbers. I mean,
Right.
the persons who are in the black market and so forth, everybody that's seen the seedy sides of our society, they have accountants. I mean, they're all in their own way trying to do the accountants. And even Capone, he ended up going to prison because of tax evasion. Well, he had an accountant, so I mean, obviously, there's people who are willing to do it.
Roger, do you know what happened with Al Capone? How he was turned in and who turned him in? Do you know how that happened?
I can't recall. You'll tell me, and I'll remember.
This is really interesting for me. So at his time, Al Capone was the biggest criminal gangster in the U.S. Right? He was the mob boss, right? His lawyer turned him in. So now you just stand back and think about this. When they asked the lawyer, why did you turn him in? The lawyer said that he had like an 8 or 9-year-old daughter. And he said, I could not look into my daughter's eyes knowing that my work is helping this criminal. So that was like an ethical dilemma for the lawyer, where he said, I'm keeping this guy out of jail, but I can't really make eye contact with my daughter because he felt that guilt. He felt uneasy about that, right? So that's like, I guess that's a very honorable, very ethical kind of lawyer, because I have met many criminal lawyers who said to me, you can murder someone with witnesses and I will get you off, right? Like they're very proud of that capability, right? So that's a different kind of lawyer.
Yeah, well, I think both those scruples that exist in the legal world exist in the accounting world. And I appreciate the fact that that lawyer was looking their daughter in the eye and realized I'm not being true to myself. And that's something that I think as accounting professionals will also face in certain circumstances simply because of how people like that business owner who was wanting to write off this fictitious truck that's not what we do, and
No.
that's not how we do this. So I appreciate that example.
Actually, there is a concept of a slippery slope, right? Like if you
Yes.
start accepting these sort of what you would call like minor deviations, they'll get bigger and bigger and bigger, right? Like you'll be in code of conduct violation, you'll be dragged in front of a judge, and like it's just a horrible outcome.
Well, you're actually bringing up the next thing that I wanted to do. And because you mentioned the slippery slope, let's go that direction first. But with the slippery slope, it's a great analogy to say, yes, one thing may be inconsequential. It might be insignificant. We might be able to rationalize it saying, oh, in fact, we might not have intentionally done it, but later realized it was done, and realizing it's an oversight, just kind of rationalize saying, well, there's no reason to go back and fix it. But then because we let it stay,
Right.
it then causes us to do another lie or do something else to substantiate it because it's becoming known. And all of a sudden what happens is that one thing that we thought would go away in time resurfaces and it comes back. And rather than facing and addressing it, we dig deeper. We double down, and all of a sudden we're in a situation where we're now complicit in doing whatever it was before because we're now perpetuating it. How do you feel about that? What would you say about that?
That's exactly how it is, right? And especially the way that the accounting works, we have like a self-balancing kind of a system. It's a double entry system, right?
Yes.
So if you falsify expenses, if you falsify your assets, your inventory, whatever falsification, and it's interesting. I took a course once where someone was talking about fraud, and the instructor went into the specifics of how you commit fraud. So one of the participants said, you're actually teaching us how to do this, right? In accounting, there's only so many ways, right? Like there's inventory valuation, there's expense falsification, there's capital assets being expensed. Like there's only a handful of ways to do it. But the accounting system is such that a falsification does come out. You can't keep falsifying, right? It's going to come out. It's going to come out in a big way.
Yes.
Very unsettling to try and explain that after the fact, right? In one of my courses, we have a case where I think this was a mining company where between the owners and the financial people, they were so interested in showing good performance, they used accounting as the way, right? So they exaggerated their revenue, they suppressed their expenses, and they created very, very enticing bottom lines for their investors. But very soon it came, I think it took about 3 years, but it became very obvious that these numbers were not real, right? So what happened after that is like people went to jail, the company's operations were down to like 20% of what they were. They were like a leading company, like they were the number one company in their industry, but they fell into this earnings manipulation. So this is enticing in the sense that, there might be management bonuses, there might be a bottom line pressure. I can understand that urgency or whatever, but the results will never be good. It's just no way you can have good results if you're starting with bad action, right? Like it's just not going to be. So I don't know did I answer your question, Roger?
You did. And it actually causes me to go a little further because I think there are some things that we need to recognize as accounting professionals as we consider how fraud may come up. And this is clearly in that ethics discussion.
Sure.
So that student was clearly keen to point out, you're teaching us how to do it. Well, conversely, same coin,
Yeah.
I'm showing you how it happens so that you can identify it and perhaps mitigate against it. So in order to mitigate, you have to understand how it's happening. If somebody's coming in the front door all the time, I need to tell you this is where they come in, the front door, so you can do something about it.
Exactly.
So my point is it generally is in, and I'm just going to oversimplify this, in 3 phases. It's either accidental or complicit, the error.
Right.
The error, that's the first thing. It's done, right? It was either intentional or accidental, but it's done.
Right.
The second phase is it's identified. Someone notices it. The question is, at that second stage, is whether they choose to address it or overlook it. And in addressing it, it's okay, do we now fix it and remedy it and deal with the consequences of it? Or do we overlook it and just kind of turn a blind eye to it and say, well, somebody else will find it, or maybe no one will ever notice? But the third thing that we have to recognize is that there are consequences. Either the the decision, whether it was intentional or accidental, it now has disrupted the accuracy of the information. And now everything's in question. Everything's in question because we don't know if that error was accidental or intentional. And if it was intentional, where else are they also manipulating the numbers incorrectly? And if it was accidental, where else are they accidentally, not knowing how to do this, making mistakes elsewhere? So the moment you find one thing, it's probably a tip to an iceberg. And the question is how do you do it? Do you just walk away from it and let it stay there? Or do you remedy and fix it and address it? So would you add anything more to that 3-step process that I just spoke?
No, that's very good. That's a really good way to put it. I look at the whole function of accounting. Like, for example, one of the things I know is that the importance of accounting is not really understood, right? So forget the accounting profession. We understand, we're in the profession. But when you look at business owners, you look at business managers, you look at non-financial people who did not do a BCom or an MBA and are not trained in accounting, their perception of our work is that we're adding numbers, we're doing like a mechanical task, right? Like we're like a sales journal or reconciling a bank, or like they see our work as very detailed, boring, mechanical, right? That's the perception of the profession. All this stuff, ethics we're talking about, that does not enter in their minds. However, when you look at fraud prevention, you look at internal control, you look at theft, you look at business success, without accurate reporting, you're not going to have without accurate accounting, you cannot file your taxes, you cannot prepare your financial statements, you may not get a bank loan because you don't have a proper statement and so on. So the value of our work is not the mechanical, it's the accuracy, the integrity of the end result. That is what we bring to the table, right? That cannot be done by computers alone. That cannot be done. AI, all of that stuff can do certain things, but not the things that we bring to the table. But what I find is many business owners, they look at accounting as a cost center, as necessary evil. They don't see the return on investment, the fraud prevention, the accuracy, a perfect example of this is I was brought into a client where the owner felt there was a fraud going on. So I had done their work many years ago. So I went in and I started doing like a fraud investigation. Very quickly, I learned that this is no fraud. It's someone doing the accounting who has no accounting knowledge. So it's like a receptionist, was highly trusted person. And then they had multiple companies. They had intercompany transactions and hundreds of thousands of dollars. They had common Visa card, like total mess, right? Like simple things like the entity concept, simple things like cost-based accounting, the stuff that bookkeepers understand, this person did not understand. So basically, this went on for about a year. They couldn't reconcile their Visa accounts. They couldn't reconcile intercompany accounts. It became a total mess, but not because there was a fraud, but because this person didn't have knowledge. The owner didn't really understand that you can't do accounting unless you have accounting training, right? And I've seen this in many clients. I had another client where they had a huge mess, but as I'm trying to get them to organize their accounting, to pay for a bookkeeper, he did it very reluctantly. It took me like a year to convince him, right? Because they don't see, if you said, hire another salesperson, you'll get 200,000 of revenue, you'll pay 70,000 or whatever. They see that. We don't have that kind of quantifiable return on investment. And this is a reality, not only in small business, but I think generally our profession is very misunderstood. People see it like boring and dull and long hours and all of that, but they don't see the outcome of our work, right? Why we do that. Right? Why is it necessary to have internal control? Why is it necessary to have a controllership function? Why does the controller insist that all these documents be signed and be filed? And why is your expense report being held up? They don't really understand that, right?
Yeah. What you're bringing up is, I think, some of the discussions I see regularly happening with business owners to understand or rationalize employing and working with accounting professionals. First and foremost is compliance. Clearly, there's that
Right.
tax obligation, and you have to, I mean, Uncle Sam here in the United States expects every year on an annual basis, you calculate your tax liability. You need
Well,
to
exactly.
determine what that is and file
Yeah.
your taxes accordingly. Well, that could be just the one and only motivation a business owner has to doing accounting, is just to pay their taxes and be
Right.
compliant there.
Right.
But there's a second one. The second one is, are you actually getting a return on your investment? You're doing all this
Well,
activity, this
exactly.
business is going on.
Yeah.
Can we show that there's an ROI? And so the accounting actually proves that second level, which is, are we actually making money here? And there's cash flow and the obligations that we have with it. But
Yeah.
that's beyond compliance. That's actually, I'm trying to run a business. But you bring to the table a third thing that's like an insurance policy. You never want to use the insurance policy, but having it brings peace of mind. And what the accounting brings is this confidence in the numbers, that
Well,
they're
exactly.
accurate,
Exactly.
and that there's not fraud going on. People aren't taking advantage of the system, misusing the trust that goes on there, because clearly there are people that don't have ethics and they're willing to create shadow companies, shell companies to
Right.
process expenses and get paid on monies that aren't owed them. And all of a sudden you find out later on that they've embezzled all this money. Well, how did that happen? Because somebody wasn't paying attention to the accounting. That's where it's all occurring. So you've got those three levels as to why we exist as an accounting profession. I'm sure you can come up with many more, but it's definitely compliance. It's
Right.
clearly running a profitable business, and definitely the insurance of knowing that no one's taking advantage of the company.
For sure.
Anything that you would add to that?
Yeah, yeah. So, yeah, and this is exactly what's going on when you see the frauds and you see the failures in all the sectors, the public sector, not-for-profit sector, and the corporate sector. That lack of knowledge is a risk, right? That lack of accounting knowledge, discipline. What I say, Roger, is that the most dangerous person that you could hire is an unethical accountant, right? That would be the most dangerous, because they understand accounting, and they're the persons who will then become fraudsters and so on. I used to say that if you wanted to rob a bank, you don't need to have a gun, right? If you understand the systems. And this is exactly what happened at Toronto Airport a couple of years ago, where these employees, I don't know if you're aware of what happened, but they did the biggest gold heist at the
Oh,
Toronto
yes.
Airport,
Yes.
because the employees colluded amongst themselves. They figured out how the paperwork is supposed to work and how shipments get authorized and all of that. They created a fraudulent shipping document. They sent a fraudulent company, and they picked up, I think it was like $20 million of gold, and it was given to someone who was not the person authorized through this fictitious invoice, right?
Uh-huh.
So they created a fictitious invoice which looked real. A truck pulled up which looked real, and the airport put $20 million worth of gold bars into this truck, and they drove away, right?
Yep.
So now they are investigating, they're catching, but this highlights my point that you don't need to have a gun, right? If you understand the systems, you can collude and you can violate those systems. $20 million was gone, right?
That's right.
Get your copy of Red to Black. It is the book written for accounting professionals to help businesses turn around and go from being in the red to being in the black. This book is written for consultants, business owners, operators, and managers. No matter what your client's product or service, or irrespective of your talent, skill, or expertise, as an accounting professional, you'll be able to use the principles presented in this book to actually become, for your clients, the profit and growth expert. Every chapter is filled with principles and concepts that you can use immediately with your clients to lead them from being in the red to being more profitable in their business, and see you as, in fact, their guide, their coach, with the expertise and wisdom that you can bring from this book. In the book, you have how-to guide explanations. You have models that you can follow. You're shown how to actually calculate and determine the fees for your services, the actual model that you'll use during the implementation of all this, and most importantly, the end-all results with your clients. Get this book now and see what it is you can do to offer this new revenue-producing service as, in fact, the profit and growth expert. For more information on how you can take advantage of this offer, go to the episode description, and there get the information you need to take advantage of this today.
Well, let me ask you a question then regarding ethics. Are there any warning signs that we need to be paying attention to that might be incentives for individuals to maybe bend their ethics or compromise their ethics? What are those warning signs? What are those incentives that may cause people to maybe not align with the values we would expect them to have?
So there are many red flags. I mean, the most extreme thing we've seen is like what happened with Wells Fargo Bank, right? What happens with Wells Fargo is they set up very high performance targets. So their lenders could not achieve those performance targets. What happened is they started falsifying. So they started creating fraudulent customer accounts for
They
credit
did.
cards and things like that.
Yep.
So that's like an extreme. That's like a leader setting up such a high bar for performance that you can't achieve it through normal means. So the rank and file people, they falsified and so on. Similar thing happened with the subprime mortgages, the crisis we had back in 2008, where bank leaders decided to create subprime mortgages to earn bonuses and boost the values of their shares and so on. Those are like very extreme examples. So I think that management pressure, the pressure to achieve a bottom line, can be a huge red flag. If you have an organization that is driven by achieving certain targets that are very ambitious, right? Or an organization that says you have to achieve this target, it doesn't matter how you do it. So the ethics and the code of conduct and the rules fall by the wayside. So I think this is one of the biggest risk areas is management bonuses, bonuses on stock options, and being driven by share value. I mean, I can tell you something very alarming. I had a meeting with a retired Big Four partner. Somebody introduced us. It was like a breakfast meeting.
Mm-hmm.
He ended up retiring from the Big Four and then becoming a CFO of a public company. He said to me, as CFO, his job was to produce a 4% increase in the bottom line every year. That's how he saw his position.
Okay.
So when I heard that, I said, this is pretty alarming, right? That goes to the fundamentals of our profession. So what he's telling me is that because he understood how the auditors audit, he understood everything about what they're going to do, he worked on creating that 4% income, regardless of whether or not the company earned that, right? That 4% increase in income. Very, very alarming. So you can see like that kind of thing is going on out there. And this is like a CPA, senior person in our profession, right? Has that kind of ethics. So I think when you see like, when you see people acting on pressure, when you see like a leader behaving that way, I think that's a huge red flag. You can have a code of conduct, you can do training, you can do all kinds of things. But when leaders behave that way, that's a huge red flag, right? Like that's something you need to really work on, because you're going to drive the truck into a wall, right? Like there's no good outcome there, right? When leaders are behaving unethically.
Yeah. Well, I appreciate those illustrations because I think they demonstrate how we can be compromised or poorly motivated. So the thing I would add to this is incentives, compensation.
Huge.
You've got to be very careful as to where you're putting those carrots, because what you're going to reward is either good or bad behavior. And I'll just give you an example. You could have the best of intentions from a management perspective to say to an employee, hey, we need more dials, more talk time. We need something, right? Well, those metrics aren't revenue, they're activities. And so you're presuming as a manager that these activities that you're trying to incentivize will actually return those revenues. They'll actually result in those revenues. The problem is the dials, they can fake them all day long. The talk time, they can actually fake that all day long. You want me to dial? I'll dial my mom. I'll dial the neighbor. I'll dial the pizza store. The point is we're assuming everyone has the same ethics as we do. And if it were me, I would do X, Y, and Z. The problem is by putting that incentive so strongly on something that they have control over, they're going to figure out ways to work around it. And it's just like that 4% return on the net income. You can figure out a variety of ways to achieve that. If you're telling me my job is to get 4%, I'm going to figure out, come heck or high water, how I'm going to do that. And so we have to question now the ethics of the individual, because it might be the right thing we're wanting as an outcome, but did we clearly set up the barriers to manage so that they're not enticed to actually maybe fudge things and
Yeah,
so forth.
so I
So,
think this is this. I see it as a flaw in our system. It's like a weak area. This earnings based compensation.
uh-huh,
The purpose of the earnings based compensation was to drive behavior that would result in earnings. That's why we
correct,
do it, right?
correct.
So I think the solution here is to look at non-financial metrics, right? To look at non-earnings based metrics. So you could look at, like, for example, in the luxury car area, luxury car dealerships, the manufacturer compensates the dealership on customer satisfaction.
Correct.
So they have like a polling, they have a survey, they have
Survey. Yep.
scores, and you get compensated based on that. So that's definitely non-financial, right? That's an example of compensation based on how happy your customer is with the service you gave, right?
Yes.
So we can look at that customer satisfaction as a metric. We can look at employee satisfaction as a metric, right? How happy is your workforce? You can do a polling, a survey. So we need to shift away from purely bottom line kind of measurement, because that seems to drive, or could drive, that's the risk of, let's say, bad behavior that'll have bad consequences. So you'll achieve your earnings, but later on you'll have bigger problems. So I think like customer satisfaction metrics, employee satisfaction metrics, even like ESG is a very interesting area. Like, it's falling into our laps whether we like it or not. So environmental, social, and governance, non-financial metrics of, are you achieving the targets you set and things like that. If you tie that to management compensation, you'll see a lot of very sincere action, because you're paying them for achieving that, right? If you simply go and say, okay, we want to be a good citizen, we have a good policy and all of that, you may or may not have that outcome. So I think the non-financial metrics for management compensation would go a long, long way.
I appreciate you pointing that out. It's what other things can we quantify and measure that we can perhaps reward for them focusing on. So thank you for that. I'm going to wrap this up and actually do a quick summary of this, but I want to mention that when I am finished with that, I'd like your closing thought. So before I begin, though, I'd like to point out that Arun actually has an ethics course, something that you may want to check out. And so I'm going to put in the episode description some information regarding his company and some of the things that he's involved in, especially the ethics program that he has. It's ethics risk analysis as well that you can take advantage of. But with that being said, I also want to invite you to take advantage of the Accountrepreneurs Challenge. This is a challenge that we have for individuals that would like to actually build the premier accounting firm. This is a 90-day challenge where we help you focus on things that are personally and professionally related to your business. And I want to encourage you to sign up for this. It's a free challenge, one that you can actually sign up for now. You can go to universalaccounting.com and in the free resources, actually find the Accountrepreneurs Challenge. And I invite you to take advantage of that today. In addition, I want to invite you to GrowCon. GrowCon is a conference for owners of bookkeeping, accounting, and tax businesses. It is here at the conference that we actually, on an annual basis, invite in those experts to share with us things that we need to consider as we're running our businesses to grow and get more clients, to offer quality accounting services and get paid what we're worth, and also work efficiently and profitably. So if you'd like to actually join us, I would encourage you to go to universalaccounting.com, and there in the navigation, go to the GrowCon page and register. And I look forward to seeing you there. In addition to all of that, I do want to actually say that as a summary of our conversation today, there are a few things that really stood out to me. One of the things that I thought was very interesting is just this overarching effect that ethics plays in the economy, just the high level view of what our profession brings to the confidence in the numbers that exist in business. I think ethics is something that we assume other people also have, that they would do as we would do and do so right. And so I think that's one of the things that's very important. We also talked about how with ethics, these things can actually become bent and what might lead to those. It could be accidental. It could be something that's intentional. But what we have to understand as accounting professionals is as we become aware of them, how do we react and fix them? And I love this story that he shared of the construction worker who was intending to buy a vehicle, didn't buy a vehicle. The accountant realized that this was something that was showing on the books, but wasn't an asset. It was being depreciated. It was used as a tax deferment. Well, this is something that obviously we just can't stand for. And so, as an accounting profession, we need to recognize that sometimes people are willing to bend the rules that we're not willing to do because of our ethics. And so, I think that's important. We also mentioned the fact that although as CPAs and EAs, there are those ethics that make up our designation, but as a profession, bookkeepers, tax preparers, and so forth, we overall have ethics that are expected of us, a reputation to actually have. And that is something that we need to be sensitive to. So I'm grateful that we had a conversation today, not only about ethics and its relationship to the economy, but also ethics as it relates to us. And lastly, motivations, some of the things that sometimes entice individuals to maybe bend the rules and how we maybe need to do things that aren't financially geared, but other metrics that we can measure that might be ways to incentivize and perhaps get people to do and make better decisions. So really great conversation today. I'm really appreciative of Arun sharing these things with us. So what would you like to leave as a closing thought, Arun?
If I'm allowed, Roger, this went so fast, right? It's like, I feel like we just started talking. I'm going to say two things, right? Number one, you mentioned about my ethics risk analysis and my ethics course. I just wanted to say quickly what it is. So I looked at professional practice through an ethics lens. So what I'm looking at is identifying what are the ethics risks in your practice, evaluating to see which ones might happen, like the probability, the impact if it happens. And the real thrust of that course is how do you prevent, detect, and mitigate? What are your strategies or responses to the high probability, high impact risks? So what we did is we looked at risks relating to clients, risks relating to staff, risks relating to practice management, right? So that would be like, that's kind of like examining your practice from outside. And we have a fillable form. I think it'll be really useful for people to look at it like that. And it strengthens, the benefit of that is it strengthens your practice, the value of your practice. You can perhaps mitigate the risk and prevent the risk, right? Second thing I wanted to say is that I'm currently working on looking at the implications of AI on the accounting profession and what are the risks, how can we benefit, what will happen, and so on. So this is like a work in progress, but if you're interested in what I'm going to be doing in the next 3 to 6 months, I'll be creating like a program on that, which will actually provide direct help and advice. Basically, there are two components. One is how to harness and how to utilize AI, because this is very much here. And the second part is how do you improve your non-technical skills so that even though some of the mechanical part of the work is automated, the ethics, the strategy, the critical thinking, the use of the information, leadership, decision-making, team building, all of those things, along with the technical knowledge of accounting would definitely be amazing for future career.
I love it. I appreciate you taking the time to actually explain that a little bit further, because I do encourage my listeners to check that out and follow along with you as you actually go about creating that. So thank you. One of the things I want to do is for my listeners is encourage you, if you haven't already, subscribe. We'd love to have you subscribe to the podcast and join us each and every week as we have on experts to share with us things that we need to be considering as we're running successful accounting, bookkeeping, and tax businesses. It's here that you get the information that you need to have the premier accounting firm in your area, ranging from marketing, selling, pricing, tech stacks, onboarding clients, mental health, and so many more. So join us each and every week. As it relates to the podcast, I also want you to consider going to universalaccounting.com, and there in the navigation, finding the podcast section where we actually have highlights. These are playlists where we've compiled over the last number of years the premier episodes, the favorite episodes, the ones that address specific issues. We've put together playlists that really address things that may be specific to your current situation today. This is your chance to go binge listen to what the experts are having to say as it relates to marketing, selling, and so forth. So take a moment, go to universalaccounting.com, and there in the navigation, go to the podcast section and listen to the highlights. Also, with regards to GrowCon, if you'd like more information, that annual event, go to universalaccounting.com, and in the navigation, you'll find the information you're looking for related to GrowCon and get your ticket there. With that, I look forward to seeing you at GrowCon. As it relates to other things that we've discussed today, if you'd like more information regarding running a successful business, training your staff, check out universalaccountingschool.com or give us a phone call. You can reach us at 801-265-3777. And always remember this: accounting success is universal. Do take care. Have a great day and be safe out there.